It's maddening, isn't it? Everyone's talking about carbon offsets like they're the silver bullet, like buying some credits automatically wipes your hands clean and your conscience clear. But here's the brutal truth: offsets alone won't fix this mess. They're a band aid on a hemorrhage. And these ETFs popping up, promising to package carbon offsets into neat little investment bubbles. They might look promising, but can they really become the market movers we desperately need? Or are they just another distraction while the planet burns? Look, founders, investors, leaders, you're stuck. On one side, pressure builds to show impact, prove you care, and actually move the needle. On the other, you deal with skepticism, greenwashing, and vague promises that never pan out. Every carbon offset ETF you see comes with a hidden cost: uncertainty about the real impact, questions about credibility, and the nagging feeling you might be playing into a system rigged to maintain the status quo, not disrupt it. That frustration? It's justified. Here's the thing: if you want to make this work, if you want carbon offset ETFs to become genuine market makers, you have to push harder and beyond what anyone else is willing to do. Stop treating carbon credits like magic beans. Demand transparency, yes, but go deeper. Demand traceability that's cryptographically secure, not just paper certificates that anyone can slap a seal on. If the technology isn't solid, if the projects behind the credits aren't independently verified with ongoing real-time data, and yes, that means satellite imagery, blockchain enrollment, independent audits done quarterly, you're just funding smoke and mirrors. Without this, you're a speculator, not an impact investor. Next, you must leverage the network effect. These ETFs by themselves are powerless if the ecosystem around them is fragmented and fractured. Create alliances with the projects, the tech providers, the verification bodies. Push for ETFs that don't just aggregate credits, but actively participate in growing those projects. Like investing in scalable greenhouse gas reduction technologies, or reforestation that's backed by real on-the-ground communities benefiting economically, socially. Shift from a passive investment model to an active stewardship mindset. Hold the fund managers accountable, not just for returns, but for impact milestones. You also need to demand dynamic market mechanisms inside these ETFs. Think beyond static portfolios of carbon assets. Introduce active pricing based on real-time impact data. Buy low when a project struggles. Pump in funding for improvements. Sell when benchmarks improve. Turn investing into a tool for change, not just profit extraction. Innovate in risk modeling. Climate risk isn't linear, and your investments shouldn't be either. And here's the harshest truth: it's no longer enough to trust traditional rating agencies or legacy frameworks. Those models helped create the problem by incentivizing box ticking instead of results. Step outside their shadows. Design your own impact metrics. Use machine learning to cross-validate ecological outcomes against financial data. Build layered, interlocking accountability where money flows only if measurable results flow first. This is brutal work, but it's the front line of impact investing today. Finally, if carbon offset ETFs are to become market makers, they will have to shift from being instruments of convenience to instruments of transformation. That means readiness to embrace volatility, to take sharp losses on projects that don't fly, to double down and scale those that do. It means accepting that this will be messy and painful, because real change rarely fits neatly into a quarterly earnings report. So if you're watching this, and you want real impact, not just a green sticker on an index fund, stop waiting for permission. Force transparency. Demand radical accountability. Build ironclad networks that connect every layer from project developer to investor. Shake up the status quo with relentless, data-driven pressure. Carbon offset ETFs can become more than just market players. They can be catalysts for the green transition. But only if you stop seeing them as a passive tool and start owning them as your weapon. No more half measures. It's time to upgrade the game or get out of the way. Subscribe to our YouTube channel and check the featured link to discover more.